Welcome to the first episode of Commercial Property Roadshow in 2022. So what are we going to talk about today? Well, we're going to talk about the best buys coming up in 2022. I'm sure there's a lot of people out there who's looking at what they should be buying in 2022. Now, looking back in the year that was in 2021, there was a lot of craziness in the market. What are we going to be seeing in 2022? Well, we're just seeing some listings at the moment coming into the market. In about 2 to 4 weeks time, we're going to see where expectations are. But I'm thinking that vendors based on last year are going to set their expectations high, expecting you to be paying top dollar for their properties. But that doesn't mean that you should. So what are some of the best buys I'm going to be looking for this year in 2022? Number one, I am going to stay closer to big I'm not going to go too remote. Now, talking to people on the ground in the different states and talking to colleagues and talking to other people in the market and talking, obviously, we speak to real estate agents across all around Australia. What we're seeing is because we're having this boom in the metro areas, it's got an on-flowing effect, like that ripple effect. So the fringe areas have had a bigger boom because people have disliked being in the CBD. So fringe areas have really outpaced the CBD. And then we've got the ripple effect going slightly into more regional areas. We've seen the regional hubs boom, and I think that will continue to boom for the next sort of 6 to 12 months. But there's a lot of people who are now looking for yields that they would find in metro or large regional areas in more remote or more out of the way locations, and that's somewhere you should avoid. That's something that I'm absolutely not going to be putting our clients into. But look, I'm not your buyer's agent yet. It is not your dialogue. If that is suitable for you, then absolutely. If that's something that you want to do, I'm happy to troubleshoot. And as I do, I've got clients who buy in mining areas. I've got clients who buy in agriculture areas. I buy clients in rural areas. But you have to have a certain type of profile. So don't stray too far away from metro or major areas. And also, the next thing is look at the concept of distance, right? So if you're in Sydney, right, somewhere around 30 k's out of Sydney CBD is really not that much, right? Because you're really looking at, that's not even the Central Coast. We're really in suburbia. Somewhere 30 k's out of Melbourne CBD isn't too much, but somewhere around 30 k's even out of Brisbane. But when you're looking at 30 k's out of somewhere like an Adelaide metro, you start to pick somewhere that's 30 k's outside of it, somewhere like in one of like a Devonport or a Launceston or a Hobart. Now that may be much smaller towns. For those areas, even 10 k's can be much smaller towns, and it could actually rise your risk profile. So 30 k's out of maybe somewhere like Rocky is definitely your higher profile. So don't stray too far away from your metro area. So I definitely will not be where I'm going to find the best buys is the things that people overlook. So I think this year there is still the search for perfection. So a lot of people are looking for the perfect property. So that's your 5-5-5-year leases, to your brand name tenants or to a longevity tenant, and to a good location, probably a warehouse property, and they'll pay top dollar for it. And I'm meaning like somewhere like a 4% in somewhere like a Brisbane, right? And that's not something I would be looking at because that's not a great buy. What is a great buy is something that people overlook. So someone that has been there, probably a tenant, been there for a long time, the warehouse or the property itself may be run down. It might only have 18 months left on the lease or maybe 1 year left on the lease. That's what I'm going to be looking at. And that's kind of buys you're going to be getting. If I get that at market yield, which could be somewhere like Brisbane, could be 6%, then I believe I'm doing well because I know that people are paying for premium stock at a 4%, or will be paying 4% in this year to come. And even I'm getting a market yield, and people might be saying to me, okay, well, you're buying a rundown property with a short lease and you're buying at 6%. Well, I know that in a space of time as the market levels itself, I could tweak that property and potentially bring it up when I do a bit of a refurbishment or wait for this tenant to exit, or maybe wait for rent review. I could actually then get it up to be above market. But because the market yield is compressing, the prices are going up. So if I can get ahead with my yield, then that's where I'm going to be winning. So that's what I'll be looking for. Secondly, I'll definitely be looking into office space this year. Office space still get a bad rap. And at the moment with all the Omicron going through, there's going to be people shying away from it. which is an excellent time to get into an office space, but you have to be open-minded. You have to be able to have the power to hold. And when I'm talking to hold, I'm talking minimum 3 years. So if you've got that, then offices to buy is great. And I'm looking at metro areas like a Sydney or a Melbourne. I won't be looking so much into Brisbane. I don't mind some of the office spaces, but they'll have to get a much higher yield than Sydney, Melbourne office spaces in order for me to be able to buy in Brisbane. So Brisbane office space that's yielding 5.5% to 6% may not cut it unless it's a particular type of really good tenant, which say if you get a medical, allied health, really high-end professional like engineering firms that you know are going to be solid, to get that in Sydney, you know you're going to be paying much higher, then yes. But if it's just a run-of-the-mill office space, especially larger office spaces, I'll be looking back into more capital growth than immediate cash flow right now. So Sydney, Melbourne, what I would be looking for. Then the third best buy I think that will come up in the market to come is actually, what I'm going to look at is properties that it's not quite right. They're not in the perfect location to suit that kind of tenant. So what I'm looking at is sometimes the location of a property is not perfect. So you might go there and you go, okay, so they have some access issues, they have some right of way, or potentially they may just be that where they are, they're at the back of something. It's not, and then as a result of that, the value of the property is lower compared to everyone else in the market. And why do I think that's a great buy? Is that it depends on the tenant. You can get a really good solid tenant who doesn't need to be a destination tenant, that can be in those locations, be there for a long time, or it could have the flexibility that even if it's not, then later on you could split it up, and just because it's at the battle axe, or just because it's at the end of a driveway, or just because there's a slight imperfection there, you could actually capitalize on getting still a very solid tenant and a longevity investment through that kind of property. The other property I think that is going to be a really great buy is going to be vacant properties this year. People are definitely shying away from vacant properties or vacancies. So if you're buying a property that's vacant, I think that you can actually get a really good deal. And if you want to flip and you actually have that kind of appetite and be able to hold through the interest and all the things along with it, and I think that you will benefit into the future. So what I would suggest is moving forward, that if you do have that kind of appetite, then I think that vacant properties are really good as well. So these are my 4 best buys for 2022, but no guts, no glory. Fortune favors the bold, so you really have to be bold moving forward. 2022 is going to be an amazing year. It's going to have a lot of opportunities. It's going to present you with opportunities for cash flow, opportunities for growth in the future. But get it wrong, your property would not appreciate in value for a long time to come. And one of the things is, if you do buy too remotely, you'll find that you'll have your tenant hold you ransom, and that you would find that the yield that you're paying now is actually you should have got 1 or 1.5% more in a different time. So that is something that I will definitely be avoiding. So sometimes faster, better, bigger is not always the best. Big, bright, shiny objects, stay away from them. They're not always the best. It is to be nimble in this market because it's changing all the time. It is to be savvy in this market because you know your strategy, you know exactly what you're looking for. It is to be active and be ready to make offers, and don't second guess as much, because you can do a lot of that through the due diligence process, or have someone like our team to support you through it. So I would suggest that for anyone out there who is watching this video, looking at what the great buys, any of those 4 great buys resound with you, they all carry with them a lot of different risks. Or if you just want a simple set and forget, and you don't really want to be paying the exorbitant amount or the lower returns that's happening in this market, and you want someone to give you a strategy, then reach out to us, helentarrant.com, book in a strategy session. Happy to walk you through what is right for you. This market out there is ruthless, and if you are a newbie out there, you want to make sure that you have your back covered, and that's why you need a team like us to support you through the process. So let's jump on a call. Let's talk about your strategy. Let's get 2022 right for you, so you know what is the type of property and what the profile of the properties are like. Because whether you're buying vacant, whether you're buying something not at the quite right location, whether you're buying office space, or whether you're buying something that is, you know, not a brand new tenant, a rundown property, there's metrics that need to be met in those properties, and there's places that is a no-go. And I work on, if I'm not going to buy the property personally, I won't put my clients into that property. So see you in the next video. I'm going to delve a little bit deeper into the different strategies around commercial property. I'm going to talk about more this year, and I'll take you on the road as we explore all the other areas in Australia. Reach out to me, helentarrant.com or helen@commercialpropertycashflow.com.au, and let's jump into the strategy session. Let's make 2022 a great one. Bye for now.